Class 1, Chapter 1, and this is on the managerial accounting. Managers. What do you know about the managers? Manager of organization, usually he is the person who performs several major activities. Now, which are those activities? For different charts, you're going to see different perspectives. On this part, in this course, we're going to focus on four main activities. First one is planning. Second one is directing and motivating. Next part is controlling. And the last one is directing decision making. And now we're going to break it piece by piece. First, planning. In the planning stage, before we even start the planning stage, there's one important thing that you have to have if you want to manage something. The thing is, you have to have a goal. It's very hard to achieve something if you don't know what you want to achieve. It's pretty much impossible. So, in order to start with the planning, you have to have a goal. Once you have a goal, then you can identify alternatives how to reach your goal. After identifying the alternatives how to reach your goal, then you can choose the best alternative that's going to bring you to that goal to the shortest, fastest, easiest way. And once you do that, then you can develop your budget, which is going to guide you how from where you are, you're going to go where you want to be and achieve your goal. That's your planning activity, which I believe you're doing this every single day, not only once a day, probably 100 times a day or maybe more. You already plan. Your goal probably yesterday was to come to the lecture and listen this lecture today. So you plan how to do that. You choose the best alternative that's going to do the job. Probably you haven't done the budget, but for the other planning and other activities, in the other goals that you have in life, you still have to have a budget. Maybe the budget for this activity is how to budget my time. So at 9 o'clock, I to be in front of my computer, logged in Zoom, and listening to the lecture. Budget don't have to be only on the quantitative side, on the financial resources only. It can be some other resources as well. But we're going to talk about the budget when we come to chapter 9. Let's continue with the second activity, which is directing and motivating. Very important activity. Why? Because usually we, as individuals, as human beings, we tend to forget. And sometimes we purposely forgetting things. What we're trying to forget. We're trying to forget our goal. Why? Because sometimes the goal is too hard. For that reason, we have to direct and motivating ourselves in order to do those small daily activities which gonna keep us going towards the path that we choose, towards the alternative that we choose in order to reach our goal. I know sometimes how many of you are working? Is there anyone who doesn't work?
I think most all of us are working.
That's my guess too. So then the question is, what's the question? What makes you wake up every morning and keep going to work that chances you to like is not very high? Probably because that work that you're having right now is just a step of your life that's going to bring you to the some bigger goal that you have in your mind. So in your planning activity, you choose, I'm going to go for that work right now. So that's going to help me to finish the school. And once I finish the school, then will be more opportunity waiting for me, and then I can achieve my goal. It's easy if you every day you wake up and say, okay, I'm going to go to work. I'm happy. Everything's fine. The hard time is when you wake up in the morning and say, what I'm doing. I don't want to live this life. Then you have to directly motivate yourself to keep running and keep doing what you're doing because that's going to bring you to the bigger goal that you have in your mind. So basically, you have to give yourself a small assignment, you have to solve problems, you have to deal with the conflicts, and you have to communicate in order to directly motivate yourself. Next activity that we have as a manager is to control. I know sometimes people, when they hear about the control, they always scared. Oh my God, they have to control now. Control. What is the control though? Control is the function that helps you to see where you are compared to the plan that you already made. That's the control. So again, on the planning stage, you identify your goal, identify the alternative, identify the easiest or the fastest way you can go to that alternative. Then you prepare the budget. Is it by time? Is it by money? Is it whatever it is? Then on the controlling stage, you're going to compare where I am compared to where I supposed to be based on my plan. Make sense? So in that case, you're going to prepare some reports, inform the reports, and you will compare the actual situation versus the budget that you already prepared. And then you can see where you are. Are you ahead of the budget or you behind the budget? Where can I push? Where I can slow down? What I can do the next. Next thing is decision making. What's the decision making? Decision is the most basic managerial skill which give you ability to make intelligent, data-driven decisions. Can you remember this, please, for me? This is the basic managerial skill which give you ability to make intelligent, data-driven decisions. How many decisions you did since you wake up this morning? Probably a lot.
Yeah,
What kind
probably.
of coffee? Probably what kind of coffee to drink. Should I wake up in the first decision is should I stand up on the get up on the bed or should I keep sleeping? That's probably the first decision. Should I check my cell phone or not?
Did I turn
Should
off
I
my
go?
alarm or not?
Exactly. So many decisions. What what dress to put on myself? What should I do next? What should I take a breakfast? Should I not drink a break? Should I not take a breakfast? What exactly to do? So those are decisions. But again, this is the basic managerial skills and its ability to make a intelligent, data-driven decisions. So you have to and then analyze the data and all the available information, and you choose the best course of action for your personal benefit. Now, if it's in the personal level, let's put it in the company level. That will be what will be the best for the company. And on the company level, where we're on the company level, or when we're on the business level, The three main questions, they're not three, but some of the main questions, which are limited to three, let's say three, will be what should be selling, to whom should we sell it to, and how we should execute ourselves, or how should we execute the whole plan. So again, the management is involving again the four activities. First one is the formulating long-term and short-term goals and developing the planning it. Then you have directing and motivating. You have to implement the plan by directing and motivating yourself. Then you're going to have controlling. You're going to measure the performance. You're going to prepare report which compare the actual versus the budget. And in the middle is the decision making. Decision making you can do in any stage. You can change your plan. You can change your alternatives. You can change how you're directing and motivating. You can change how you do the reports. You can change how to do what to do when I see the differences between the actual and the budgeting. Very interesting. Once we know what the management doing, we're coming to very interesting part. Okay, we have our goal. We have our plan. We know how to direct and motivate ourselves. We do we do the controlling. We know how to make a decision. Now the thing is, what's our strategy? Before we decide on our strategy, let's see what exactly is strategy. And this is the definition that I like the best of all the definition of strategy that I face so far in my academic life. And that's strategy is a game plan that gives you ability to attract customers by distinguishing yourself from everybody else. Imagine this. You're going for the job interview. How many people will be on that job interview? Probably you're not going to be the only one. The chances you to be the only one are very slim. So now the question is, who is your customer? The customer is the person that's hiring for that job, the employer. So what do you have to do in order to get the job? You have to have the strategy. Why do you need the strategy? You need the strategy for only and only one reason. You want to attract that employer by showing him that you are different than everybody else. You have to distinguish yourself from any other competitors which are applying for exactly the same position with exactly the same employer. How are you going to do that? Well, that's a $1 million question, right? The main focal point of the company strategy should be target customer. So how are we going to do this? How are we going to attract those customers? You have three main strategies. First is customer intimacy. What means customer intimacy? You know everything. You're going to go and find out everything about the customers. Everything. What they need, what they want, how they want it, when, why they need it, everything. Once you understand what the customer wants, when the customer want it, how the customer want it, what to do when he get it, then you're going to respond to that individual customer needs. So basically, you give him the solution right in front of his hands. You wanted this, that this is what it is. Second option that you have for strategy is operational excellence strategy. What's the excellence strategy? Well, you're better, faster, more efficient, more intelligent, more knowledgeable, and cheaper than everybody else. So you're delivering the product, which is with better quality, with the faster services, more convenient, and at lower possible price than any other competitors on the market. And the last strategy is my favorite strategy, is the product leadership strategy. What's the product leadership strategy? You are the highest possible quality product. When it comes to the job searching, you are Chanel in the back, in all the woman's bags reality. The girls probably know what I'm talking about. If you want to buy a bag, uh, obviously you want Chanel. Why? Because it's the most expensive. You, if you have to choose between Louis Vuitton and Chanel, you're gonna go with Chanel. Why? It's more expensive. Why?
Did you
Because of
have
the quality, right? Because it has the
a
highest quality. End of the story. Does the people buying Chanel? Yes, they do. Do they need it? Questionable, but they want it. So the product leadership strategy is the one that you offer the highest quality, the best, the outstanding product, and people want it. Product leadership strategy you can see in Apple, you can see in Louis Vuitton, you can see in Chanel, you can see in the luxury car, and anything like that. Product operational excellence strategy you can see in the Dollarama and some other stores which is producing something which is questionable if it's more efficient, but it's faster and it's cheaper. Customer intimacy strategy, those will be some different products. So the question is, now when you have the goal, when you have the plan, when you have the decision, directing, motivating, when you have the control, when you're making the decisions, and now when you understand your strategy, available strategy, what you're gonna do.
teacher? I have a question.
Yes.
Does the company have to prioritize one of these strategies, or can use these three at the same time, or what do you think
Yes.
about?
Company can use the different strategy for different products at the same time.
Thank you.
Don't forget that the main reason for the strategy is to attract the customer by distinguish our products than competitors. Obviously, if you're with Louis Vuitton, once you choose the product leadership, that's where you're going to stay, correct? You're not going to change that strategy from one bag to another bag. Now, if you're a different company, let's say if I'm Toyota, then I'm going to have different strategies. Yes, for different models, cars that I'm producing, I'm going to have a different strategy because I'm chasing different type of customers. Make sense?
Yeah, totally. Thank you.
If I'm producing products and with this product I'm chasing this type of customers. With that product and chasing that type of product, that customers. With that product and chasing this type of customers, then you're going to choose different strategy. Again, example would be, let's say Toyota. I want to cover all the aspects of the market. So basically, I want to target the young generation. I want to target the low income people. I want to target mid income people. I want to target high income people. That's why I'm going to produce a different cars for the different type of market, different type of customers. Make sense? And that's how again I cover all the aspects of the customers. Where Louis Vuitton, I'm chasing only the certain type of customers, the one that they can afford that bag. End of the story. I'm not chasing uh, all the customers. I'm chasing only specific type of customers. So that's why I'm focusing on the product leadership. Yes, I'm having the high quality products, but my products are the most expensive. The question is, can you afford it? If you can afford it, you're not my customer. Make sense?
Yes.
It's very important before you start your business, you to identify who is your customer. And again, how can you attract your customer by distinguishing yourself than any other competitors? Let's see the aspects of accounting. There are two types of accounting, two divisions of accounting, if you want to say that. One is the financial accounting, which you already face probably 211 course, accounting 211, financial accounting, and the other part is managerial accounting, which is 201. Those accounting different dealing with different things. What's the comparison between financial and managerial accounting? Users. Based on users, financial accounting is for the people outside of the company, where the managerial accounting is for the people inside of the company. We're using it for control of the organization. Time focus. Financial accounting is more concerned about the history, where managerial accounting is emphasized is on the future. What I can do today to change something in the future. Financial accounting is dealing with what happened in the past. Then we go into the next point, verifiability versus relevance. Well, financial accounting objective is on the verifiability. I want to verify the information and make sure that this information is perfectly recorded. Where in the managerial accounting, I want to see, is it relevant for my decision making? Because sometimes I have to make a decision for a single product. I don't need the whole financial statement. Give me only the relevant information to this product and this product only. I don't want to know about the other products. Give me information only for the product that I want to make a decision, only for the customer that I want to make a decision. Next thing will be precision versus timeliness. Financial reporting, as you know, those people who are using the financial reporting, those are external users. And those external users are very sensitive on the precision of the information. So then we have to verify the information, we have to confirm the information in order to make sure that we're producing perfect reports. On the managerial accounting, I'm focused on the time. I want my report right away. If I'm working in the store, I want my inventory at the end of the day. I don't want my inventory at the end of the month. I need it today. Because if I don't have it at the end of the day, I cannot make a decision what to buy, what to not to buy, how to deal with my customers tomorrow. Subject primary focus on the financial reporting is the company itself, where in the managerial accounting we focus on different things. We focus on the product, we focus on the customer, we focus on the product line, we focus on the different kind of what will be that division of the company, something small. We're not focusing the whole report. That's irrelevant for us. Rules. Financial accounting, very specific rules. General accepted accounting principles, accounting standard for the private enterprise, and international financial reporting standards. All crazy stuff. Managerial accounting, no rules. That's why if you use book of 1960 cost accounting, that's still applicable today. Requirements. Now this is the tricky part. Financial accounting is required. It's a mandatory for the external reports, where managerial accounting is not. It's not mandatory. We don't have to do any of the reports. Now the tricky part is, since managerial accounting is not mandatory, what that means to you? That means everything that you learn from this course, you can easily throw it in the garbage. I'm sorry, that's the reality. No rules, no mandatory. So whatever you learn from this course is just waste of time. However, is it going to help you to run your business better? You're going to tell me after the course. But don't forget, it's not mandatory. You don't have to do it. And most company, they don't do it.
So
Or,
would you say this is more like for personal?
mm, let's go deeper in the course and you're going to tell me.
Okay.
Okay? Let's do this deal. I'm going to keep going deeper in the course and you're going to tell me, is it personal or is it for the business? Is what exactly is? But keep in mind that managerial accounting, there's no rules and it's not mandatory. Do you need it? That's a different story. So organizational structure. If we have a picture of the organization of the structure of the company, we should have something like this. Now, obviously, this is not going to work for the local grocery store where the mother is the uh, making decision, father is the delivery guy and is the salesperson as well, and the daughter is the one who's doing the accounting and running all the supply stuff. That's not going to work. So here we're talking about the corporation, big corporation. Big corporation which reporting to the shareholders. Those shareholders going to elect the board of directors. Board of directors going to appoint the president, and the president is going to start appointing all the different kind of key management which going to deal with the management function in the company. For that reason, we're going to have two type of employees. We're going to have line positions, and we're going to have a staff position. Let's start with the easy one, staff position. Staff position is the one that doing the heavy work, the one that employee that nobody sees, nobody knows, nobody ever is going to see. Line position is the one that are under the line, on the front line, under the projectors, under the light. Those are the one who are most famous. Those are the one that we can blame if something goes wrong, and we can kind of reward or applaud if everything goes well. Line position, perfect example is Neil Armstrong. Everybody knows who is the first man step on the moon. Staff position is the person who tied the last bolt on the rocket, or the one who check all the ties, everything on the rocket, are they tied? Is everything perfect? Is everything done? And he pressed the ignition button of the rocket. Do you know the name of that person? Nobody knows. Why? Because he's a staff position. Do we need staff position? Of course. Without staff position, there will be no line positions. Where you want to be, you have to decide for yourself. Controller. Controller, obviously, that's a member of the top management team. He's responsible of providing timely and relevant information for the planning and control activities for the management purposes. And he also preparing reports for the external users. So controller dealing with the both type of users, internal and external. What's the process in the company, which is the business process in management? That's a series of steps that has to be followed. So you can see a piece of metal to become a spoon. What we have to go through? Well, that piece of metal first, somebody has to do research and development on the spoon to see how we can actually eat soup. They have to come up with some ideas. That's why we have the research development. Then we're going to have a product design. We can design different type of spoon. Once we decide, okay, this is the spoon that we want to manufacture, then we start manufacturing. As you can see, research development and product design, those two activities on the business process or on the value chain, those are the start of the whole process. Sometimes there's so many products, so many products. I mean, it's not a product actually because you never see manufacturing, but there's so many, uh, let's say, things went to research development, then went to the product design, and at the product design stage, somebody decides, no, we're not producing this, and that never see production. Because once you start manufacturing, that's where the real expenses come. So after research development, you go into the product design, then you start manufacturing. Once you do the manufacturing, you're manufacturing, and you manufacture enough to cover all the costs for the research development, for the product design, for the manufacturing, and for the future costs that you're going to have to the next three steps of the value chain. Because if you don't produce enough in the manufacturing process, you're going to lose money. So let's imagine this. We design and develop the spoon. We decide on the product design, and then we manufacture it. And we have, let's say, 10 million spoons. Now we have something that people can use, but there's a problem. Those people, they don't know about it. What do we have to do? We have to market it. We have to tell them, hey, we have in our warehouse 10 million spoons. Which spoon is the perfect for you? That's the best spoon ever that you're gonna use in your life. That's the last spoon that you're gonna lose in your life. And they're gonna say, okay, can I have it? Well, you can. Now we have to distribute it. So now how magically that spoon have to go from our warehouse to the customer hand. And at the end, we still have to provide the customer service because believe it or not, there are at least 5 phone calls that are gonna say, hey, how can I use it actually? So somebody has to explain those people how exactly they can use the spoon. So all those different stages, processes are your value chain. of the company. In the process, there are two approaches that can make the business process better. First one is the lean production. The second one is the enterprise system. And the last one is the risk management. Let's go with the first one, lean production. Lean production is the idea which organizes resources around of the business process. So we're not going to produce what we want to produce. We're going to produce only the quantity that the market wants or the customer wants. When the customer order it, then we're going to produce it. Make sense? So that's called also just-in-time production. And number of the units in that case tend to be equal to the number of units that we gonna sell. Or if there's some, there will be minimal inventory available. How can we do this? How this gonna help us? We're gonna have a fewer defects, less waste of effort, and quicker customer response time. Now the next one is the enterprise resource system, which the enterprise resource system, that's a single software which combines and integrates all the data across the organization, which will enable you just to get instant access to all the data that you need. So all the data is recorded only once in the company. That goes to centralized data system, and from that data system, you are able to extract the data, which can be unique for different type of reports that you need. That's what you want, isn't it? You want to have access to the information and only to get the information that you need for the decisions that you have to make right now. You don't need anything extra. The last one is the risk management. Risk management is the process which is used by the company proactively to identify, manage, and mitigate the risks. Once you identify the risk, then the most common risk will be to reduce that risk, implementing specific type of controls. But again, you have to be able to identify that risk first in order to manage it. Those are some examples of the business risks, an example of how to reduce that business risk. Another important thing, in order everything to work in managerial accounting, you need to be a good manager, is you to have knowledge about the ethic, corporate governance, and corporate social responsibility. Not only as an accountant, but any professional. I'm going to extend this, the first one, not only to accountant, I'm going to extend it to all the professional. If you put yourself and if you start claiming yourself as a professional, you have to maintain a level of competence which is appropriate for that type of designation or that type of individual that you want to be associated with. So the first is competence. You have to be competent. Second, you have to be confidential. Confidentiality is essential because you're dealing with the you're going to be dealing with a very important and sensitive information. And you're going to use that information to make a different analysis. Next one, you have to keep your integrity as a human being and as a professional. You have to keep your integrity. How? by avoiding a conflict of interest with the employees and with the client. Make sense? Simple rule. When you're working somewhere, don't hire your son or your daughter or your parent or your mother or your father unless that's a family business. And the last one is you to be objective. What means to you to be objective? Objective means you to tell the people everything. The way I did today. Example will be the way I told you today about the book that you have to buy. I give you the benefits and I give you the negative side, unfavorable information, which is the cost. So if you want to tell the people, you have to be objective. Give them the good things, give them the bad things, let them make decision. Then we're going to the ethic and ethical standards. Ethical standards, obviously, those are very important. That's an essential part of our life. Without ethical standards, everything will be chaos, probably. In business, they're even more important. Why? Because they're going to help us to smooth uh, and easy going through all the function in the market and the economy. If we don't have the ethical standards, where that's going to hit us? Well, if we abandon the ethical standards in business and in life, that will mean for us low quality product, which is going to give us a lower quality product. Less desirable goods and services, high price. Well, what's happening right now? We already see the high prices. We see that the goods are less desirable, and the services that we receive are below the standards that we expect or the money that we pay. What that means, our quality of life getting lower. Why? Because of the ethical standards. Because without ethical standards in business and economy, all of us who depend on that, we're going to see changes we're going to suffer in our jobs, in our goods that we get in, and the services that we're receiving, and everything. So if you want to improve something, we have to start with the standards and how we behave. Once we change our personal behavior, that's going to help us to achieve higher ethical standards outside in the business and the management and everywhere. Corporate governance. Corporate governance, that's a system by which company is directed and controlled. We have the board of directors, which board of directors controlling the top managers. First, the board of directors choosing, appointing the president then choosing and monitoring the top managers. And the top managers doing only one thing. They want to make sure that the objective of the shareholders are met. What's the objective of the shareholders? We get more money. Why? Because the shareholders usually investors. The only reason that the people become a shareholders is because they want money. So the board of directors make sure that the top managers meet the requirements and meet the objectives of the shareholders. Now, on the corporate governance level, we should not consider only the shareholders, but we should consider employees. We should consider the customers. Should consider creditors and the suppliers. Furthermore, we should consider the environment and social responsibility that we also have, like a sustainability for the future generations. That brings us to a very interesting point. You as a manager, you should know about the leadership perspective. And organizational leaders, they unite the behavior of employee around the two common themes, which is the pursuing strategic goals and making the optimal decisions. Which are the factors that influence those behaviors? That's different thing. You have to have something that's coming inside of you. You have to have that intrinsic motivation. Then you have to have all the extrinsic incentives all around you, some other incentives, and you have to be free of bias, which is very hard to be. Trust me on that. So, what's going to make you, if you decide to be a leader, what's going to make you a good leader? You have to possess two qualities. You have to be credible and you have to be respectful. Close your eyes and tell me which of the leaders today, in today's world, from all the leaders that you're seeing around the globe, which leader possess any of those? Now, what then you're going to ask me, well, but we don't know what the credible and respectful is. Okay, let's go. Credible means in order people to perceive you as a credible person, you have to have a technical competence. You have to be competent on the things that you're doing, the things that you're saying, the way you're saying it, and everything that you do. Second, you have to have a personal integrity. And the third one, you have to have a strong communication skills. I don't know if you remember, there was a movie, uh, The King's Speech, which Colin Firth playing the role of the Stammer King,
Yes.
and there was a very interesting scene. They were sitting in the room and they was watching video on the German, right? And on that video there was a Hitler in front of the crowd, and his daughter, he was yelling something, uh, and his daughter asked him, "Papa, what he's saying?" And he said, "It doesn't matter, but it matters the way he's saying it." Something like that. I cannot paraphrase it, but there was something like that. He want to emphasize that he has a very good communication skills, strong communication skills. That's what can make you credible person. That's how people is gonna lead you, follow you. That's how you can lead the people. Now, that's a credible. What's gonna make you respectful? First, you have to have a strong mentoring skills. You have to be a strong mentor. You have to understand people. You have to respond to people, and you have to know how to guide them. Now, the tricky part here is to guide them to become better than you. That's the strong mentor. Strong mentor is the one who can make you better than himself. Then you're going to have a strong listening skills. So you have to Not only listening is one thing, but not only listening, but you have to hearing people. Because listening and hearing, those are two different activities. So you have to understand. Sometimes you can say something, but people, people you see people listening, but they might not hearing. So you have to actually listen what the people say. And sometimes when you see yourself in the mirror, have you lately see yourself in the mirror? Probably you did this morning. Have you ever wondered why do I have one mouth and two ears and two eyes? I have two eyes, left and right. I have two ears, left and right, but I only have one mouth. Why is that? Maybe there's a reason for that. And the last thing that you have to have is a personal humility. And once you have all those six, that's going to make you a good leader. And that concludes chapter 1